Oh, hello everyone. I hope you're all well. It's Susie here from Esoteric Trading Solutions. Hope you're kind to yourself, you're kind to your family and friends, you're kind to your animals, and you're kind to strangers, and just make this world a better place. Some people are wondering why I'm not using the dickhead word. Well, to be honest, darlings, some people are really giving me flack about it. So I'm not going to use it anymore. So I know some people are disappointed, but anyway. I just wanted to address just a couple of queries on YouTube, and that's fair enough. Seems to be a little bit of confusion. Why, if XRP was deemed a security, why it would be good overall for XRP? And I'll tell you why, but we'll just go through it anyway. And there's just this article I wanted to bring your attention to, Crypto Daily UK, which comes across, and it says XRP can legally be listed on Coinbase. And basically, Coinbase does have the go-ahead now to list digital assets which are classified as securities. Now, whether I'm right or wrong, I actually believe most cryptocurrency, pretty much all of it, should be classified as securities, most cryptocurrency. Some people might disagree with me, and that's fair enough. Everyone's entitled to their view. But anyway, that's my honest belief. So basically, Coinbase, as you all know, has reported on July the 16th, the US Securities and Exchange Commission, which is like God for the commission, which basically operates and literally watches over, if you want to call it that, not operates, but watches over all the financial markets in terms of what happens and makes sure that everything legit and everything is up front, and they monitor everything. And the FINRA, Financial Industry Regulation Authority, has given Coinbase the go-ahead to list any cryptocurrency that it classifies as a security. So pretty much Coinbase can do that. Now the question is, why is not Coinbase listing XRP? And I've had people ask me this question, and I'm as baffled as anyone else. I honestly don't know. Obviously, there's stuff in the background that I don't know anything about. They're obviously against XRP for some reason. I'm completely baffled when they put on something like Ethereum Classic. A couple of days after it got put on. Before that, it was actually being hacked. They put on privacy coins, which again, with regulation, I don't think privacy coins are gonna make it going forward. So I'm as baffled as anyone else. But anyway, so basically, Coinbase have come out and they've said they're going to list these securities here. That Zcash, which my understanding is a privacy coin as well, XRX and Stellar and Cardano, but they're still not listing Coinbase, which again doesn't make a lot of sense to me. So we got that article there as a backdrop. Now what I want to answer is the question, why do I believe, just looking at XRP specifically, why do I believe it being classified as a security is a good thing for it? Now basically, what the wholesale fund managers, the big money managers that manage trillions, those guys will manage your, unless you have a self-managed super fund, they will manage your 401k money or my superannuation money or anyone's superannuation money. They'll manage corporate supers money, and they'll manage huge amounts of assets, domestically as well as globally. So basically, if a cryptocurrency gets classified as a security, it means it's being regulated under the US Securities and Exchange Commission and under financial industries. Sorry, I don't know what's wrong with my tongue today. I can't pronounce things properly. Under Financial Industry Regulation Authority. And what the big fund managers have been waiting for is all the legislation to be put in place to protect the end investor. That's you and me. They've been waiting for the exchanges to be basically to be regulated by the Security Exchange, no different to other exchanges, whether it be the equity exchange, whether it be, you know, foreign exchange, or whether it be the bond market, which is over the counter, or whether it be anything, whether it be the futures exchange. And they've been waiting for those exchanges to be regulated, but they're waiting for the cryptocurrency exchange to be regulated. And the fund managers need that because they act like a custodian. They basically manage that money, all that money on your behalf, and they have to make sure that everything they do is done properly, you know, monitored, everything's done right. They have asset allocation, they had strategy, everything is done and everything is documented properly, so that they, you know, when it comes to the client whose money they're managing, is done absolutely properly. Now, as you know, with cryptocurrency assets, they need to sit in cold storage, if you want to call it that. They need to sit in custody where they're off the exchanges and where they're safe, because otherwise there can be, you know, as you know, coin theft. If they're on the exchange, the exchange can be hacked, there can be coin theft, all sorts of things. So it's really important when we're talking about trillions and trillions of dollars worth of money, that the fund managers and the hedge fund managers and the big, you know, corporate traders or whatever, and the dealers and the money market dealers and all sorts, the bond traders and everyone else, is able to keep assets off the exchange and keep assets in security in a cold wallet. Okay, so that's pretty much, they've been waiting for all this to come through before they can actually even think about, you know, putting money into the cryptocurrency market. Now, there's a lot of professional fund managers that are very interested in investing in the cryptocurrency market. BlackRock came out the other day and said they will be looking at it as an opportunity, because, as you know, the cryptocurrency market can go up 75%, it can go down 75%, or a particular coin like Ripple the last year went up 35% or something. So there's massive opportunity for fund managers, for institutional traders from the big banks and the big corporate dealing rooms and the big fund management rooms to basically make money out of the cryptocurrency market. But they cannot come into this market until everything's regulated. And so that there's no basically insider trading, there's no shenanigans with prices being manipulated like we saw once with Bitcoin Cash, where the price literally went up from 1,500 to all of a sudden 9,500 US on Coinbase, and they had to unwind those transactions, which were basically illegal. So the fund managers are waiting for all that, okay, for proper regulation of the cryptocurrency exchanges. Now, as I said before, we have well over 600 cryptocurrency exchanges, and a big fund manager that manages your money or mine and manages hundreds of thousands of individual clients' superannuation money or 401k money will not deal with a small exchange that basically is undercapitalized, not regulated, doesn't have a proper custody like Coinbase, doesn't have a proper license, and potentially doesn't even have a credit rating, because they manage the assets, your assets, my assets, on behalf of me and you. And if those guys do something wrong, we can basically sue them. It's just that simple for our superannuation. Okay, now getting back to the security thing, a fund manager generally needs to set up an investment portfolio where they're allowed by the clients to invest or trade cryptocurrency. If they set up a cryptocurrency fund, there will be a prospectus which will get sent to, if I want to invest in cryptocurrency, I will have to fill out my details and give the fund manager the authority to invest and trade cryptocurrency on my behalf. Now, the thing is, as I said, fund managers have hundreds of thousands of clients because they're managing trillions and trillions of dollars. And if they had an existing fund where they only invest in fixed income, which is bonds, or money market type products, which is, term deposits, bank bills, NCDs, or short dated corporate paper, or they invest in equities, for them to change the mandate of that fund, they would have to literally send out paperwork and documentation to every investor in that fund, getting approval to change the mandate of that fund, i.e. what are they allowed to invest in? You see what I'm saying? So what a fund manager will generally do, because cryptocurrency is deemed as another asset, it's a fifth asset class, rather than money, and short dated bills, rather than fixed income, bonds, corporate paper, which are generally a bit longer, rather than property, rather than equity, which are the four asset classes, and cryptocurrency is the fifth, they will set up a single cryptocurrency fund where there will be, as I said before, an investor that wants to put some of their super in that will basically fill out a prospectus and know all the risks of a cryptocurrency fund, know the potential drawdowns, know what can happen, know when you can take your money out, and all that sort of thing, right? So the fund managers have to make sure, obviously the fund managers, administration people have to make sure that all the paperwork is signed by the individual, so that they're allowed to invest in cryptocurrencies. Because fund managers are audited constantly, and they're audited, by their internal auditors and external auditors, and they're also looked at by the asset consultants. If they do something wrong, they can lose money because of asset consultants. They are basically, absolutely, they have to make sure that all the regulatory environments, everything's done properly, and everything is done properly within the fund's management business and within the money they're actually managing. So they need regulation, and they need securities that are regulated. Okay, yes, fund managers sometimes buy, alternative investments which don't sit on an exchange, but it doesn't mean they're not securities. Okay, now if we go to the list of the largest fund managers in the world, say the top 10, you'll see how much money they are basically managing, and we're talking trillions. Okay, currently today, the market cap, according to Coin Capital Markets, for the cryptocurrency market is about 295 billion. But if we look at the fund managers that manage money globally, it's in the trillions, okay? Let's just go and have a look at that first. And anyone can look this up. This is from Wikipedia. BlackRock, which is a US fund manager, manages this is assets under management, AUM, manages 6.28 trillion. One of the biggest fund managers, well, it is, out of 2017, is the largest fund manager in the world and is in the US. And they've said just recently they are very interested in looking at the cryptocurrency market. So this money here would be managed against the four asset classes, being money market, being bonds, fixed income, being property, and being equities, okay? Now, because they've said they're interested in the cryptocurrency market, they would also open up a cryptocurrency fund with experts knowing how to do relative value, doing, valuations on cryptocurrency, understanding and analyzing the technology, and making sure the technology works according to what the white paper says. Vanguard, again, is the second largest fund manager in the world, according to assets under management, 5.1 trillion. They're generally an index fund, but it doesn't matter because they put money into the four markets, the four financial markets. And a sub of those financial markets is obviously foreign exchange and commodities. But as I said before, the main asset classes, money market, Fixed interest and bonds, number 2. Equities, number 3. And property, number 4. And the cryptocurrency market makes number 5. And then we go down the list. UBS, Fidelity, which have been mining cryptocurrency for years and made a lot of money out of it. Then we go down further, JP Morgan, PIMCO, and whatever. As you can see within that list, some of the, out of the 10 largest fund managers in the world, 1, 2, 3, 4, 5, 6, 7, 7 are in the US, okay? It is very important that markets are regulated for these fund managers because their butt is on the line all the time, to put it bluntly. If they do something wrong with the client's money, your money and my money, our superannuation money, they can be sued. And the negative flack from that can be very bad. They can lose clients and they can cause a big drain on their funds, and it doesn't look good because the asset consultants basically review their performance every quarter, every year. Some of the biggest corporate superannuation funds want to know what's going on with these fund managers, and if there's any negative, the people within professional markets and financial markets are going to know about it. Okay, so let's now look at basically an asset consultant's presentation of the fund managers globally. And this is not even talking about hedge funds or people like Soros or anyone who have got even more money, okay, who are all going to come to the cryptocurrency market, okay? Now, if you could imagine just 1% of this, of BlackRock, coming to the cryptocurrency market, 6.2 trillion. What's 1% of that? My maths is terrible. But it would be, look, probably, I don't know, what, 600 and... I don't know. I'd have to work it out, but it's a big figure. You can appreciate that. Won't be a sec. I'll just take you to the next article. Also, I meant to mention another thing fund managers, institutional money managers need is transparency in terms of pricing. What they need is to be able to prove where the market is, the pricing of a security. So most of the majority of their funds are invested in securities that are listed on the stock exchange, that are actually listed, for example, even on the over-the-counter market, which they may not be listed, but there is a price mechanism, a pricing mechanism to prove where those prices are, because what fund managers do is they unitize all their funds under management. So you as the client could invest in something at $1, and at the end of the quarter or the end of the month, all those assets they invest in get revalued, marked to market, and if they go up, the overall fund could go from $1 to $1.12, and all those securities within that fund need to have proper pricing checked, and those prices have to be correct. Otherwise, they could get in a lot of trouble for that as well. So if we go to this report by basically Willis Towers and Watson, they're one of the largest global asset class managers in the world. And obviously they're looking at pension funds and investment funds. And basically this report, they basically looked at the trends in total value of assets, the analysis of the largest 20 asset managers globally, passive management, which is basically index funds, and pretty much, you know, looking at the asset allocation. So just move myself away there. So essentially what they're looking at is in the US, basically the assets under management currently as it stands in the US only are more than 81 trillion. And this is in the US only, and up from 5%, 5.8% from the year before. BlackRock is still number one, and we saw those figures. BlackRock were at 5 trillion or whatever it was. North America has the main of the big money under management. Okay, so if we go down, you'll see just the allocation of that. So very quickly, if we look at the growth in this market, it's gone from literally here to here, and the market is growing. It's up 5.8%. For the world top 500 managers globally, and if you look at, basically, we'll go to the next thing, the distribution by assets. The US from 2007 has gone from 41.59% to now currently managing, as of the 2016, 53.4%, which is massive. Again, if we look at growth of assets under management, we see that China is growing dramatically, and that makes sense because the middle classes are becoming much richer and wealthier, and obviously they're now getting into super funds. The US is going up, obviously the UK, we're seeing Brazil, the same story. And if we go to asset allocation, and this is what I'm talking about, you'll find asset allocation is across different asset classes, okay? Within equity, that's shares, obviously. Within fixed income, that's bonds and corporate paper. Within alternatives, property would be in that, as well as infrastructure type assets. Even within alternatives, they could put cryptocurrency in that, or have that as a completely separate asset class. And then you've got cash, or you have other, which could be cryptocurrencies or something else, okay? And you'll see the main of the money is invested in equities and fixed income and bonds, okay? Now, all these markets have price transparency where, you know, a fund manager or a global manager can show exactly where the prices have been trading and, you know, the end of month revaluations and that sort of thing. Now, getting back to the original question someone asked me, why would XRP, why would it be good if XRP was classified as a security? In the wholesale fund management business, where most of the money is managed, global huge amounts of money, 81 trillion, it would be much better for XRP, for the bigger picture, to be classified as a security, because fund managers can invest in securities according to their investment mandates. Their investment mandates are basically the rules of what they're allowed to invest in and what they're not allowed to invest in for the fund that they're actually managing. Okay, so basically the rules of the investment mandate say that they can invest in securities. If they're not securities, most of the time they will not be allowed to invest in securities. So what it means for XRP is, if it's a security and classified as security, it opens up a whole new door to new clients, to a massive pool of different clients, massive pool that the fund managers manage. So we, you know, say for example in America, the US, 81.4 trillion dollars of money is managed. Within that money, there is hundreds of thousands of clients within that money. You know, people that put in money for investment, people that put in money, 401k money, people that put in extra money, whatever. And what it does, it opens up a new client base for XRP, rather than the crypto market that we see at the moment, which is basically the mums and dads and small traders and investors like myself and like you. So it opens up a new source of investment, a new client base for XRP, and a massive client base at that. So what we've got here, as you can see, just pull myself away from that, is we've basically got asset participation by regional client exposure. Okay, so the clients that invest in the US has basically gone up from back in 2012, 17 trillion to basically 23.56 trillion, and so on. And if we go back, just pull up something else, total value of assets managed by the top 20. Again, you can see we're talking trillions here, trillions and trillions and trillions. So if we go to my database in Slack, some of the stories I've just copied and pasted essentially, we'll find that Bank of America is acknowledging that cryptocurrency is a threat to their business, and it's something they need to obviously look into. They're very conscious about know your own client and the regulatory environment, of course. Alibaba's looking to get into it. Reinsurance giants want transparency, and they're also looking to potentially get into the market. Again, the hedge fund industry has said, this is George Soros and, Blackstone and all that the cryptocurrency market is the fastest growing segment of all the markets. Again, IBM, is interested. The major banks are interested. If we go through big insurance, FedEx, again, JP Morgan, the world's largest banks are looking at blockchain and crypto. Again, if we go through this very quickly, Stephen Cohen, who's one of the largest hedge fund billionaires in the world, very, very well known. Other hedge funds are looking, the top 100 hedge funds, BlackRock, which is one of the world's largest asset managers. Again, we're looking at that. We're looking at lots of professionals. Goldman Sachs, to become more crypto friendly, has just hired a new person for crypto managing a crypto portfolio and the like, right? So again, if we go back to our fund management, the top fund managers, we'll see that all these companies here have made some comment or another. BlackRock has made a comment. State Street's interested in custody. State Street's one of the biggest custodians globally. And again, they will be looking at custody for cryptocurrency. Fidelity has been mining cryptocurrencies for years and is also looking for cryptocurrency professionals to manage cryptocurrency. JP Morgan, the same thing, looking at cryptocurrencies, employing people. Goldman Sachs is employing people. BNP Paribas is looking into it. Deutsche Bank, Northern Trust Asset Management. Again, going over here, Morgan Stanley, Prudential, Franklin. The list goes on and on. You understand what I'm saying? And this is going to get bigger and bigger. Now, we're looking at so many fund managers that have so much money. And as I said before, wrapping this up, if Ripple is designated security, fund managers, all these different fund managers that manage hundreds of thousands and millions of clients' money can actually invest in XRP because of their investment mandates, and they don't need to change those investment mandates because they're allowed to invest in securities. So it basically opens up another client base for XRP, and that makes it, to me, in my mind, not that I'm saying anyone buy, but in my mind, for my portfolio and for what I hold in terms of cryptocurrency, makes XRP down at these levels very, very good value for me. This is not financial advice. I'm not a financial advisor. I'm basically doing this for education, and please, you need to do your own due diligence. And if you wish to see a financial advisor, please do. So I hope that helped, guys. And I'll talk to you very soon. Sorry again, this has gone way too long. Thank you.